Live. So good to see you. So, welcome to Coffee with Markus. Today is Monday, June 15th, and this is episode 54. Now, if this is your first time here, the goal of this show is simple. I want to show you that trading can be simple and that you can actually do it. So, if you want practical tips, tricks, and strategies for your trading, as well as watching me as I grow small accounts into larger ones, then this show is for you. All right, it is Monday and the markets are crazy. We will take a look at the markets here in just a moment. And then today we will talk about a stop loss. We'll talk about what exactly is a stop loss. How do you use a stop loss? Should you have a mental stop loss or should you actually have it in the market? If you have your stop loss in the market, what about your broker? Will he see your stop and use it against you? That's what we are going to talk about today. So good to see you. Just making sure that we are live and that you can see me. If you can, do me a favor. Click on like really quick. This way I know that you can see me and we are getting started because, oh boy, what is happening in the markets here? Crazy, crazy, crazy. All right, I think we're good to go. So let's talk about the markets in 5 minutes or less. Let's jump right on the screen. So here we see the Dow Jones, and you know what? Let me actually switch to the S&P 500, and in order to see what has been happening today, we need to look at a 5-minute chart because this morning the markets opened way down. Actually, the futures in overnight session were down more than 3%. But as you can see, ever since markets rallied, they have turned positive. So from being down more than 3%, opening down 2%, they are now up. The Dow just barely 0.04, the S&P 500 0.3, and the Nasdaq is up 0.8%. So what is happening? What the heck? Why were the markets down? Well, you see, overnight, the markets were down by more than 3% because there's a jump in coronavirus cases across the United States and also in China and parts of Europe. And this is where investors and traders feared that a second wave of the virus could lead to more lockdowns, especially since in New York and Texas, they threatened with new lockdowns. So, I mean, and with all this fear, this is why the markets are down. You see, you need to understand, when traders are uncertain about what's happening, the market is going down. Usually, the general direction of the market is up. But as soon as there is some uncertainty, markets are going down. But so what has sparked this buying here? Why have the market drifted higher? Well, this is where the Fed to the rescue, right? The Fed announced further measures to support the market. They are just buying like crazy, and now they're also buying individual corporate bonds. So, long story short, the Fed said, we are good to go. We will keep buying and driving the market up. And this is what has been happening. Now, right now we see a little bit of sell-off going into the close. The markets are open another 25 minutes. So, what are there any stocks that stood out today? I didn't see many. There were mainly two stocks that stood out today that actually rallied. One of them being Zoom Video Communications, up 7.7%. Why is this? Well, as there are more fears about renewing lockdowns and that some states might actually tighten the restrictions again, that more people have to work from home and renew their Zoom subscriptions. So this is why this is going on. And the other one, Peloton, right? I mean, you might have heard it. I believe it was 24-Hour Fitness or Planet Fitness. One of the fitness centers announced bankruptcy. And this is where right now Peloton was up earlier as much as 8%, right now up 6%. So this is what is happening. But overall, are we due for another crash here right now? Well, we talked about it in the previous session in episode 53. I don't think so. See, these retracements that we have all over the place are pretty normal. We had a retracement here. We talked about it. This was around 7%. We had another retracement right here. So this was 6%. So we had retracements all over the place since we are recovering. That is normal for a market. A market does not go straight up. There are retracements. Oops, and I'm deleting them as I go. And as you can see, also this one here is only 8%. So it's really not that threatening, and we had a correction. So there was some profit taking, definitely, after the markets have been going up, up, up. And so this is where right now the markets have a short retracement. So this is why I think today would be important to talk about stop losses. And again, my promise here that I give you the market overview in 5 minutes or less. Here we go. And we managed to do this so we can get the timer out of the way. So good to see everybody here. I get a bunch of thumbs up. It seems that you can hear me, that you can see me. That is fantastic. Now, also, if you have seen the show on Friday, yes, I know I was bright red. No idea why. No, I was not sunburned. I'm using sunscreen, and I haven't been out on the lake. Last time I was out on the lake was last Tuesday. So, and then, of course, going out on the lake soon again. But anyhow, back to my normal skin color here today. So Paul is asking, is it possible for the market to crash again like what happened in 1987? You see, Paul, possible, anything is possible. Likely, no, because we already had this retracement and we do have a recovery. Let's take a look at the markets here. So as you can see, this is where the whole pandemic started hitting towards the end of February. And here we have the S&P almost recovering. And so this year, I believe it is a normal retracement. But hey, you know me. Trade what you see, not what you think, right? So this is why we'll talk about stop losses that I believe you must have in the market, especially when you're new to trading. But since the show is called Coffee with Markus, let's also have a coffee together. Now, the Dow Jones hasn't recovered that much, but you know, the Nasdaq made already new all-time highs. And right now, we're still trading at levels right before the pandemic. So this is where, Paul, is it possible for the market to crash like in 1987? Anything is possible. Likely, based on what I see, I wouldn't say so. Okay. So good to see you, Jim. Good to see you here and everybody else. Stanley says Apple looks good. Actually, let's use Apple for the example here when we talk about stop losses. Let me just come on full camera here for a moment. As you can see, I moved the camera a little bit further back. This way, you see what's happening here on my desk. There we go. That's what I wanted to show. So now you see my mug a little bit better. Okay, so we'll talk about stop losses, and in order to do this, I will actually bring up Apple because I think that this is a great example that we can use here. Okay, I'm just preparing a few things so that we can talk about stop losses. All right, so stop losses, what the heck is a stop loss? Should you use a stop loss? And how does it work? How exactly do you place a stop loss? And should you use a mental stop loss, or should you actually place it in the market? If you do place it in the market, can your broker see it? And will the broker take you out? So get you stopped out before the market goes up? That's exactly what we are going to talk about right now. So let's get started. First of all, what is a stop loss? You see, a stop loss is a predefined price of your position, whether it is a stock or an option, futures, forex, binary options, doesn't really matter. It's a predefined price at which you decide to liquidate your position, to get out if the position goes against you. And let me show you a very specific example. What you see here on the chart is a daily chart of Apple. Now, let's just say that you would have bought Apple at 340. So your entry price is at $340. And I'm moving this a little bit over here. And we need to make sure that we have exactly $340. Now, let's also say that you're expecting Apple to go up, and this is how you want to limit your risk. That's what a stop loss is for, that you're limiting your risk. Now, you can choose a level at which you want to limit your risk. I'm just choosing right now, arbitrarily, a level of 320. So I want to draw another horizontal line here, and we'll say that we have our stop loss at 320. So I'm writing it down here. This means if Apple goes down to 320, let's use a dollar sign right in front of it since I used it before. This is when you say, okay, I was wrong, I'm getting out. I'm going to mark this in red because often a stop loss is depicted in red because this is when you're losing money. So let's talk about this and also make a few more notes. So here, this means that your stop loss is $20 per share. Now, let's say that you're trading 10 shares. This means times $20. Your overall risk on this position is $200. Now, here is an important thing. A stop loss is not a guarantee that you won't lose more. You see, whether you place your stop in the market with a broker, which we'll talk about in just a moment, or whether you have a mental stop, if Apple, for example, let me just see if I find a nice arrow here. If Apple opens at 300, oops, that is way too fat. There. If it opens at 300, you're getting stopped out at 300. So let's write this down. A stop loss, that's very important, is no guarantee that you won't lose more. Example, if Apple gaps down, so overnight it gaps down because there's some bad news, right, to 300, you would lose $40 per share. Now, why is it important to have a stop loss? Because there are many traders who don't work with stop losses at all. And this is how a small loss gets into a larger loss. Now, I don't know about you, but there were some traders, as you know, if you're going back to Apple, you see, who bought Apple maybe here at 316 and then it went all the way against you, right? You want to get out of a trade if you're wrong. So therefore, it is important to have a stop loss in a market. Now, let's talk about how exactly do you use a stop loss? Well, there are two ways to use a stop loss. Either, number one, you can enter a stop loss order with your broker and therefore automate it, because it basically means that as soon as the stock goes below the predefined price, your broker will automatically sell the position for you. Or another possibility is number two, you can set an alarm and exit manually, even if it is just a mental alarm. Now, here's my tip for you. I recommend highly that you choose a stop loss that you place with your broker. And here's why. Many traders, especially in the beginning, don't have the discipline to get out of a trade as soon as it goes against you. See here in this example, if you were trading 10 shares, you would lose $20 per share, so $200 overall on your position. That's not a whole lot, right? I mean, you're still alive in the game and you can re-enter because after all, you're expecting Apple, this stock, to go up. Now, you can use a stop loss based on a moving average. You can use a so-called trailing stop loss. So there are different ways to do this. Anyhow, so many traders say, I do not want to place a stop loss in the market with my broker because I think that the broker is trading against me. In fact, I received a question the other day on one of my videos from Roger. So Roger says, Markus, you mentioned to place a stop loss and limits on trades. Do you mean conceptually and using alerts? I was told the automated ones, the ones that you place with your broker, are detected by the broker and can be used in counterplay. What is your take? That is a great question. And you see, your broker cannot take the other side of your trade unless it is a Forex broker. This is why I am not trading Forex, because with Forex, you're playing against the house. And yes, you're absolutely right. When you're trading Forex, the broker can see your stop loss and can take you out. But when you're trading stocks or options, or even binary options, especially with Nadex, or futures, your broker is not allowed to trade against you, at least here in the United States. Any regulated broker, as far as I know, across the world is not allowed to take another position. Again, unless it is Forex and these pesky CFDs. Anyhow, so this is why I highly recommend that you automate your trading and place your stop loss in the market. Now, there's one exception that I want to mention here, really important. It is when you have a large bid-ask spread. Usually you have this with options. Now, I made a video for you that explains exactly what is a bid-ask spread. It means that buyers and sellers are pretty far away, right? It means that buyers want to buy at this level, which is, let's say, $3, and sellers, buyers want to buy at $2.50, and sellers are only willing to sell at $3.50. So when you have a wide bid-ask spread, it makes sense to place alerts. That's what I do when I'm trading options, because when options, it happens quite frequently. Anyhow, I think it is important that first of all, you have a stop loss, and secondly, you place it with your broker, because this way you don't have to worry about the discipline, right? This way, the stop loss is automatically executed, and therefore usually keeps you out of trouble. Because one of the biggest problems that I see with traders is that they're losing more than they were planning because they don't get out of position when it is time to exit a position. Has this been helpful? If so, watch any of the other videos that are probably popping up here. Again, I also made a video for you that is called Bid-Ask Spread. What is it, right? And also, how exactly do you place a stop loss order? This video is called do you use a stop or a limit order? And we'll link to this in the description. Anyhow, hope you enjoyed the video. If so, give me a like because I appreciate it. I'll make more videos for you, and just click on any of the videos that you see on the screen right now that makes the most sense to you. And I'll see you in the next video. All right, I'm coming back to you live here, having a sip of coffee. And I want to answer a few questions because there are some excellent questions here from Jim, from Alex, and from others here as well. So let's just see. Jeff is asking, Jeff Allen, investor, have you ever used the stop loss on the options and profit limit in the past instead of watching the underlying stock? Yes, I have, and I have very bad experiences. So when trading options, sometimes the bid-ask spread can be pretty large with options. And this is where quickly, especially when you're trading size, it can be several hundred or up to several $1,000s that you lose if you're not actively monitoring it. So I would say if you're trading futures, if you're trading stocks, definitely use a stop loss. When you're trading options, I highly recommend that you're managing the trade manually, that you set alerts here, but great question. Okay. Stan is asking, on the coffee warmer that was given to you, where was it bought? I received it from Amazon. So it isn't Amazon. I do not know the exact brand. It doesn't say on there, but it is pretty handy. Cheers. Okay. So Kartik is asking, Markus, can you please explain a stop loss for a low price stock since we'll have a very less average daily range value? You see, this is a great concept. I personally like to base my stop losses based on the average daily range. What does it mean? You know that a stock moves per day a certain amount. And we can actually bring it up here. And I want to show you a few examples here. Let's actually use the ATR. So let me just show you, I'm adding another indicator here called the average true range, very similar to the average daily range. We can use it here for Apple. So what I like to do is look back over the last 7 days using a simple moving average here. And this is where you see right now, the average true range of Apple is $11.89. So this means that on average, Apple moves $11.89. Now, I usually like to place a stop loss at around 1 times the ADR or 1.5 times the ADR. So I believe that a stop loss here between $12 and $18 would be a good stop loss for Apple. And Kartik, I'm coming to your question here in just a moment, but I just think it's very important here. So since Apple is trading at 340, that is not a whole lot. I mean, in this example here, we talked about $20 per share. And again, I would place it anywhere between $12 and $18. Now, you talked about a lower price stock. So let's take a look at a lower price stock. For example, at what is a lower price stock right now? Let's just go to American Airlines. It's a little bit lower priced. Just want to show you an example here. So American Airlines right now is trading at $16, and you see the average true range here, or which is close to the average daily range, is around 302. So this means around $3. Therefore, here I would use a stop loss of $3 to 3 to 450, right? I mean, 1 to 1.5 times the ADR. Now let's actually mark this on the chart so that you see it. So if I'm using a stop loss here, right now it is at 16. So my stop loss would be, let's say, $3, which means at $13. So I'm marking this right here. This means that if American Airlines moves down to $13, this is when I would get out of this, right? I mean, if you're buying it here, you see, it's usually a pretty good rule of thumb where you give the stock enough room to retrace a little bit, but not too much, because honestly, if it dips below 13, I would rather wait for re-entry. You see, it has been trading as high as 22. So this is when you need to admit that you're wrong. So going back to Kartik's question. So how do you use a stop loss on a lower price stop loss? This is why I like to use the ADR, or you can also use the ATR, the average true range, to determine a good stop loss level. Good. So let's see. What other questions do we have here? Jim actually says, I've been burned a few times now with an automated OCO entry. Like you said, got caught in gaps overnight. I now use alerts only for stop losses. Jim, this is absolutely fine as long as you have the discipline to execute the stop loss. Now, Jim, I know that you're an experienced trader, so therefore that is not a problem for you. But you see, many beginning traders, let me go back to my example here. They might say, oh yeah, you know what? I'm getting out of this when it goes down to $13. And then what happens? It goes down to 13 and they said, you know what? Let me give the trade a little bit more room. And you know what happens when you give a trade a little bit more room? It usually keeps going more against you. So again, there's both possibilities. If you have the discipline to follow your stop loss and to really exit when it gets hit, you should do it. You can use a mental stop. Otherwise, I would prefer that you use a hard stop here. Okay, good. So Raja is asking, how do you set an exit on Tastyworks? You're absolutely right. It's, Alex was actually asking, how do you set an exit on Tastyworks? And Raja says, using a bracket order. Every broker is different, but often it is called a bracket order. Talk to your broker or look at some of the tutorials, whether it is Think or Swim or on Fidelity or on Schwab, right? I mean, they all have tutorials how to set a stop loss. It is different from broker to broker. The order that you want to use is a stop order. And again, I made a video for you in which I explain the difference between a stop and a limit order. And I'll link to this in the description here. But great question here. Okay. So, Honest Quester says, do you have any guidance for using puts instead of a stop loss? I wouldn't. Honestly, you see, let's go back to this example here. Yes, some traders like to keep it more complicated and then instead of using a stop loss of triggering a put. But you see, this is how quickly you can get whipsawed, because if it just dips down, activates your put so that now you have a put and then goes back up, you're stuck with a put that you bought, right? So therefore, I would say these days, you see, Honest Quester, these days, commissions are zero, right? You're not paying anything in commissions. Back in the days when we were all paying $40, $50, $60 for a trade, yes, this is when you had to get a little bit more creative. But now, if you're wrong, just admit that you're wrong. This is the biggest problem that traders have. They cannot admit when they're wrong, right? And I mean, for me, if my stop loss is triggered, I'm getting out of there. So super easy. So don't make it more complicated than it has to be. I would say just get out. The more complicated, for me personally, the more complicated I made my trading, the more difficult it was for me to execute the plan. And I messed it up. So the more complex, the more mistakes. I don't know about you. You're probably way smarter than me. But for me, it helps me to keep it easy, to keep it simple, because otherwise I get confused. And you know what they say, right? I mean, when you're confused, it's easy to make mistakes. So I would not do that. Okay, Naive says, what about conditional orders? Shall we submit the bid and stop loss orders at the same moment? I'm not quite sure if I understand the questions. If you're talking about the profit target and the stop loss, yes, you can set a so-called OCO, one cancels other. Conditional orders usually means if this happens, then do this. So you could, for example, do this with options. If the stock hits a certain price, exit the option at the midpoint. But you see, you never know if you're getting filled or not. The only guarantee that you're getting filled is by using a market order. And using a market order is basically like writing a blank check. It tells the broker, fill me at the best possible price. And this is the broker's responsibility right now to just get you out, and it can be usually much worse than you would expect it. So this is where Naive, I would keep it easy, would keep it simple. Yes, it does make sense to use so-called bracket order, that you have a profit target and a stop loss in the market if you like to work with profit targets. I personally love profit targets. I've been using them for many years. I believe that profit targets are superior to trailing stops based on my experience, based on my testing, and based on the way how I trade. But again, for you, it might be better to use a trailing stop. So if this is what you want to do, you can use the trailing stop here as well. Okay. So Joe is asking, why are comments turned off? They're not. They should be visible. We always have comments on. You should see a bunch of comments. Do you see them? They're usually on this side of the screen. If you're watching us on a mobile device, you might have to click on chat. But yeah, I mean, I always allow comments. There's never a video where comments are turned off. Okay, good. So let's see, what other questions do we have? Amit is asking, here. Franco is asking, how would you apply stop losses for Nadex contracts? You can do the same thing, right? I mean, you say predefine, how much do you want to risk on a trade? And then you can place a closing order for your open Nadex option. So that is absolutely possible. Good. So Amit is asking, can I put stop losses at support and resistance? Absolutely. So let's take a look at this. If you are experienced with support and resistance, and for example, here you say, yeah, you know what? I'm seeing some resistance right here at 13, 18 or 14. Yeah, you could place it here. For me personally, it's always difficult because where do you have really resistance or support, right? I mean, is this a good support level, or is a better support level down here, or is the best support level down here? To me personally, support levels are rather subjective. This is why I like to work with indicators like the ATR or the ADR, the average daily range, or the average true range. For me, it is more objective. See, support and resistance is more subjective, and whenever I use my opinion, it never goes well. This is why I have my mug here that says, trade what you see, not what you think, right? Because I don't want to think. When it comes to trading, I don't seem to be smart enough to think the right way. So this is why I like to use indicators. For me, indicators are black and white. This is what I'm using in my strategy, the PowerX strategy. If you don't have this book yet, I'll be happy to send you a copy for free. All I ask is that you cover shipping and handling, which is $4.95, so that there are no surprises. It's 176 pages, I believe. Actually, looks like a little bit less, 152 pages. Didn't know the final count here. Anyhow, this explains how exactly I use indicators. There's probably a link underneath the video. If you want to have a copy of this book, just pay for the shipping and handling, $4.95, and I'll be happy to send you a copy. Okay, good. So Raja is asking, are there charts for options also? Yes, there are. It really depends on your platform. So TradingView, as an example, is not displaying options data. But on your platform, for example, Interactive Brokers does, Thinkorswim does, Tastyworks does. I'm not quite sure about Schwab and Fidelity, but many are displaying charts on options. Okay, So Angela is asking, the PowerX Optimizer calculates it though correct, the stop loss ADR? Yes, the PowerX Optimizer, which is the software that I use, let me just show it to you. This does it automatically for any stock. For example, here for AM, that is a stock that I entered this morning. And then you see here's the profit target and here's the stop loss based on the ADR. So it tells you exactly what is the best way to exit based on the average daily range and the past behavior of the stock. So yes, the PowerX Optimizer does that automatically. Great question, Angela. Tulio is asking, ATR of how many days? For my trading style, and again, my trading style might be different than yours. I like to be in a trade between 5 and 25 days. Therefore, for me, I calculate the past 7 days. So others like to use 14 days, and it really depends of how quickly you want to get out when you're wrong. For me personally, the last 7 days, that's for me the best setting. Okay. Good. So guys asking, when exiting call options in interactive brokers, is selling a call option the same as closing a position? Guy, it depends. If previously you bought a call, closing it means that now you have to sell the call. If previously you bought a put, now you have to sell the put. If previously you sold a put, then you have to now buy it back. You see, when trading, you always buy and sell. It doesn't matter in what order. That's a beautiful thing. So you can sell first, you can sell a stock that you don't own. You can sell an option that you don't own. And then you need to buy it back. So, Guy, exiting call options, is selling a call the same? Yes, if you have bought it before. Is this making sense, Guy? Okay. By the way, how are we all doing? How's everybody doing on this Monday? If you're doing good, do me a favor. Give me a thumbs up. So if you're enjoying this video, also feel free to share this video with anybody who might find this beneficial. Anybody who needs to hear about stop losses. So feel free. Anyhow, so we will have a few more questions here. You are asking great questions. So that's the benefit of being live here. I can answer your questions. If you're watching the recording, feel free to leave a question in the comment here. By the way, if this is your first time watching this video, do me a favor and type in new in the comments. So this way I can say hello. By the way, my name is Markus Heidkotter, so shows it here on the screen. And I have a website, rockwelltrading.com, if you'd like to learn more about the way how I trade. And of course, you can always subscribe to the channel here. Okay, so let's see. What other questions do we have? Don is asking an excellent question. Do you ever use automated trailing stops? I don't. Again, based on the way how I trade, I found that having a profit target is more beneficial than a trailing stop. And here's why. With the trailing stop, you're always behind, right? So you want the stock to actually already go down again before it hits your stop loss. So I like to find a way to get out as close to the top as possible. And for me, it works best with profit targets. And I like to have a profit target that is at least twice as big as the stop loss. Now, Don, don't get me wrong, I'm not saying that trailing stops don't work. For me, my performance was better when I used profit targets than trailing stops. All right, but great question here. Okay. So, Claire, so good to see you here. Sorry you're late. We'll watch the video. No problem at all. Okay, Franco says, do you stop losses when you trade on Nadex? Usually the way how I trade, and again, yours might be different. The way how I trade, I only trade options that I let expire, right? And then when they expire, I'm either right and I receive money, or I'm wrong, and the broker or here the exchange keeps the money. So I personally do not use this when trading binary options, since your risk is already defined. You see, if you buy a binary option for $40, the max you can lose is $40. By the way, I have created a few videos around binary options. If you're interested in this, we can post them here in the comments or in the description somewhere here. Or you can just look on my channel for binary options. So this way you see how I personally trade them, and you can use stop losses. I don't. I don't. Great question. Okay. So, Jeff says ALRC support right at around 13. If it was below 13, I would watch this closely. Absolutely. Absolutely. And Jeff, I just heard from my team the good news. I am so excited that you're now part of the mastermind. You're awesome. I'm very much looking forward to working with you, Jeff. I really, you might have heard it. I told my team, you know what? I want Jeff in the mastermind. Make it happen because you are amazing. So looking forward to working with you. Okay. So Benito, you're absolutely right. I set the ATR to 7 and simple. Again, using a simple moving average for me is more beneficial. There are many ways to trade, as you know. This is how I like to do it. Okay. Madudini is asking, hi Marcus, how would you tell before the market open if the day is likely to be up or down? I have absolutely no clue. You see, today, for example, let's take a look at today again. The markets opened with a huge gap down. Let me actually go here to the charts and let me show you exactly here. So if you're looking at the S&P and we are going to a 5-minute chart, you see we had a huge gap down. So here right there where there's a blue line, this is where we open. Huge gap down. And then we rallied all the way back. So then on other days, on Friday, for example, previous trading day, we had a huge gap up and then we were going down. And sometimes you have a gap up and it's running away. And sometimes you have a gap down and it's going further down. So, I mean, Madridini, I know that there's gap traders that are betting on gap fills. I never found it to be reliable here. Anyhow, good question. Okay, Luz is asking, could you please explain a trailing stop on a stock? Absolutely, I'll be happy to. Let's actually jump back to Apple. So I'll show you what that means. So let's go to Apple. And here is one way how many traders like to use a trailing stop. So I'm getting rid of the ATR here, and instead I'm bringing up a moving average. Because many traders, as a trailing stop, like to use a moving average. Now, again, I'm not using it, so therefore I cannot tell you the best setting. The default here that comes up is 9 days, so that might be okay. So here's the idea. Who asked this? Let's see, Luz. Here's the idea. As the market goes higher, you would trail your stop at the value of the moving average. So this basically means that every day you're adjusting it. So let's go back a few days. So here you see, for example, the price of Apple is 315 right up there, and the moving average is 298. So you would set your stop loss to 298. The next day, let's just go further. The next day, as you can see, the moving average jumps up to 300. So you would have to adjust your stop loss. Now, Luz, it is possible to automate it. So instead of using a moving average as a trailing stop, you could set a fixed price. So many brokerages allow you to set a fixed price that you say, for example, okay, I want to give it a $20 fixed stop loss. So when Apple is trading at 308, right, the stop loss would be at 288. There are different ways to do it. Long story short, as the price moves up, so does your stop loss, right? So this is the general idea here behind the trailing stop. Is this making sense, Luz? Is this helpful? Let me ask everybody here, is this helpful? If it is, do me a favor and click on like, because I'm always curious to see if these videos that I'm making here are helpful for you. Because if so, I will make more of these videos. And if you don't find them helpful, then I will not make these videos, right? I mean, don't make the videos to hear me talk. Really, that's not it. It's more to help you to become a better trader. And hopefully that what I'm sharing here, will help you to make more money. Okay. Good. Richard is asking, how is the ADR much different from the ATR? The ADR actually just looks at the high and the low of the day, right? So it subtracts the low from the high and then builds an average over the past 7 days. The ATR also considers when there are gaps, right? And depending on how many gaps a stock has, it does make sense to include it. I found these very, very similar, so you can use either one. I prefer to use the ADR, the average daily range, because when trading, I do not trade stocks that have gaps. Therefore, I don't want to count them, but the ATR is close enough here. Okay. Joseph is asking, did you stop testing the option strategy you were using that was based on low volatility? No, I'm still trading it. So today I entered several trades. I entered AM. I entered, what else? TALO, TLAO, and IMMR. So there were a few options that I entered today. I'm still trading it. So, great question. Okay. Let's see. Frank says it's an awesome book, $4.95 steal. Yeah, I mean, feel free. There's probably a link here, or you go to my website, rockwelltrading.com, and I'll be happy to send you a copy of the book. I think it's awesome. Kind of biased because I've written it, but I think it's a really good book. Okay, so Matudini is saying, what is your opinion on hedging with a short order just below the stop loss? Again, I like to keep it simple. I know that there's many different ways. So personally, I don't do this. Personally, I'm just looking at the stop loss, and when it is hit, I'm getting out there. Good. Let's see. I'm seeing a bunch of likes here. So good to see you. Edward says, good clarification. James said, I hit my profit on AM today. Good for you. That is awesome. So good to see you here. Jay Sanchez says, thank you very much for the videos. Okay. Good. Okay, Benito says, recovering after getting nicked by the wick late last week. Yeah, you see, this is what happens in trading. So, I mean, days like last week, think about it. Last week we had a day where the market dropped, what, 5 or 6%. How often do you have it? Now, if you look back over the past few months, we had it more often. But in regular markets usually move 1.5%, right? So when you have unusual days, it is normal that you give back some of your profits and that you basically have to start over. As you know, this is what happened with the account that I was trading here. I mean, the account was up almost $6,000 and suddenly, boom, yeah, it's down $200, $300. This happens. The key is consistency, because you don't want to plan for the unusual days that you have every now and then. I personally like to have a strategy that works in normal market conditions, because normal market conditions are there 90 to 95% of the time. So this is why I personally rather have a strategy that works 95% of the time than having a strategy that accounts for the 5% of oddities. Or honestly, I think if you look back over the last 10 years, moves over 5% is probably less than 1%. So Benito, yes, we will have losses, and the question is, how quickly can you recover? So I'm glad to see that you can recover quickly here. Okay, so Bruce is asking, why doesn't the ATR in Parex Optimizer match the ATR in TOS? First of all, because it is not an ATR, it is an ADR. Let me just bring up Bruce's questions here. So we're using the average daily range and not the average true range. And again, we are using 7 trading days, and we are using a simple moving average. In TOS, it might be an exponential moving average, a weighted moving average. Who knows what they're using, right? This is why I like to program my own software. This way I know exactly what they're using. Okay, Jody is asking, are there events that we should be watching this week? Absolutely. Fed Chief Powell will be testifying in front of the Senate tomorrow and on Wednesday. So I believe that this could move the markets. I mean, might or might not. As you know, last week, after Powell said on Wednesday, well, the economy is pretty shaky. It might take a while until we recover. On Thursday, we had this massive dive, right? I mean, the Dow down, 6%, 7%, almost 2,000 points. So I would very closely watch Powell, and he's testifying tomorrow and on Wednesday. So Tuesday and Wednesday, Tuesday, June 16th and 17th. Okay. Good. All right. I know it is getting a little bit late. So we do have already 45 minutes into the session. And, I did a poll of what's better, 45 minutes or 60 minutes. And it was right split in the middle, 45 minutes, 60 minutes. I decided to stick to 45 minutes. This way it doesn't get boring. So if you're enjoying this show, do me a favor and give me a thumbs up, and this way we also have lots of questions to talk about tomorrow. If you do have any questions that right now have not been answered, leave them as soon as we're done here as a comment, because Christy and I, we look through all of the questions and try to answer as many as possible here. And of course, you can always text or call the office or email them at support@rockwelltrading.com. All right. If you are part of the mastermind, I'll see you tomorrow morning where we'll trade live together again. So we'll look at what happened here with PowerX Optimizer. Get ready. So we'll meet 15 minutes before the open, and we'll spend 30 to 45 minutes together. And everybody else, I'll probably see you on Wednesday in Coffee with Markus, 3:30 Eastern Time, 30 minutes before the markets close. Have a great rest of the day, and I'll see you soon. Take care, everybody.